Hello and welcome. What does the election mean for mid-market private equity? Well, here today I've got three experts in Yael Selfin, Tim Sarson and Alex Hartley to help answer that question. Yael, we're more than halfway through the year now. What's the economic outlook for the rest of the year?
So the good news is that we've had a little bit of an upgrade to the data, and it turns out that the economy was relatively strong in the first half of this year. We've also had inflation going down and potentially reaching the target of 2% very, very soon. What it means is that we are expecting interest rates to start falling. We're expecting the first cut effectively in August and then a few more this year. But we're still a little bit cautious there because the underlying inflationary pressure are potentially still there. We could see inflation picking up a little bit later on this year and next year. And therefore, there will be a little bit of tension there. We could see a little bit more volatility in the markets in the coming year as the outlook remains a bit unclear for how fast rates will be able to go down.
So you're saying Labour inheriting a more positive economic platform?
So, as I said, Rob, we are seeing a relatively robust economic growth at the moment, but it still remains relatively weak. We still expect overall growth to remain around the 1%, which means that there's not going to be a lot of room for the government when it comes to spending. Public spending is going to remain constrained, and they will need to be relatively creative as to how they're going to be able to push all these potential plans that they have in terms of investment and generally trying to encourage productivity growth to be much stronger and overall growth potential to rise. That will take time, and we're not expecting a major change in that sense over the next year.
Thanks, Yael. Hi, Tim. Talk to us about what we know so far about Labour's tax plans.
Well, if you've read the manifesto, and I'm sure you all have read it cover to cover, you'll see that aside from a few very specific policies, like an extension of the upstream windfall tax, for example, the famous VAT on school fees, it's very much a sort of business as usual, calm, nothing particularly exciting type of approach to taxation. And I think we're going to see a softly approach to tax policy with an emphasis on stability at least in the near term.
What does this mean more specifically for private equity?
There are a couple of things in there that PE will have been keeping some focus on. The most obvious one is that Labour have said that they're going to reform the way that carried interest is taxed. The other one is further changes to the non-dom rules to probably take away the exemption of inheritance tax for those who hold assets in offshore trusts. So that's certainly it for ownership. In terms of the business environment that the PE is operating in, well, what I was saying before about stability, business as usual, no huge changes. That applies equally to portfolio companies of PE as it does to listed companies, for example.
Capital gains tax and business rates have been widely trailed. What's happening there?
There was a rumour before the election, surprised the Tories didn't make more of it actually, that Labour was looking at increasing the capital gains tax rate to something closer to the income tax rate. That would be a way of removing some of the distortions in the system and would have an impact on private equity, quite a significant one. It remains to be seen whether that happens or not, but that's one to watch. There's also a consultation that's going to be happening on reforming the business rate system, and certainly for anyone operating in retail or logistics.
I guess the key question then is, when will we get more clarity?
What Labour said before the election was that they want the OBR to give a proper going over to all of their fiscal plans before they take them to a budget. Realistically, that means the earliest we can have a budget, because I think they need about 10 weeks, is going to be in September, possibly October. So there will be an autumn statement. Latest rumours are it'll be earlier in the autumn than later, but it certainly is not going to be happening during the summer recess.
Thanks very much, Tim. Alex, over to you. What's your read on what's going on in the M&A market right now?
I think M&A activity in the UK is definitely showing signs of recovery after a challenging 18 months. I think confidence is returning with greater economic and political stability. That's helped by falling inflation and stabilising interest rates. We've seen a closer alignment of value expectations between buyers and sellers. We've seen PE and lenders come back to the market to do deals, albeit there is still a very strong focus on business resilience. No one's cutting any corners on diligence, and deals are still generally taking longer. Bolt-ons have been a significant theme in private equity investing. 60% of all deals. If we look at our own experience, we've seen a resurgence of deals in TMT. I think we've had 2 in 2 days this week. Tech-enabled business services, industrials, financial services. I think that renewed consumer confidence has seen an uptick in the new level of mandates coming into our consumer business.
Given everything Yael and Tim said, what can we expect from M&A for the rest of the year?
Yeah, well, I think after a period of political instability, a new government with a significant majority will put more certainty into the M&A environment in the UK, which will provide private equity with more stability for both realising assets and for investing. I think private equity will press the button on divesting more portfolio assets, and they're going to be able to launch those into a more certain M&A market. There's going to be a focus on deploying capital, where many PE funds are sat on significant dry powder. I think we'll see an uptick of investment into new platforms, a continued level of activity around bolt-ons. And I think that uncertainty around CGT rates under Labour will stimulate entrepreneurs to look at doing deals. So I think there's a quiet optimism growing in the market, and the improvements we've seen in deal-making volumes in the first half of the year will definitely step up in the second half. Our pipeline's building already, and I think the general election result will further focus people's minds on now stepping up deal activity.
Thanks, Alex. Well, it is a relief to finally report some political and economic stability in the UK, and that is feeding through into a more positive M&A environment. We'll learn more in the autumn budget, but for now, I'm pleased to report that things are looking up for the UK private equity industry. Thanks very much for watching, everyone.